Hi everyone, welcome to Thursday, where this week we're going to take a look at Heartland Group. And again, it's a dual listed stock, so it's listed on both the New Zealand Stock Exchange and the Australian. So we'll take a look at both exchanges and see how that's comparing. Just remember, next week I am doing the free webinar on KiwiSaver and retirement. It's 1 hour. Love to see you there. You do need to register, so I'll pop a link for that in the show notes as well. Now, before I go on and take a look at Heartland Group, I just need to do the normal housekeeping, and that is that this is for educational purposes only. No way is it intended to be personalised financial advice. For that, you do need to go and talk to your own financial advisor. However, if you are wanting me to perhaps look at a share that you're perhaps considering, you're not sure about, that sort of thing, by all means, drop it in the notes and I will use my methodology that I use when I'm looking at buying shares. So let's take a look. Okay, up here on the screen, I have got Heartland Group, and I've got the Australian one on the screen here. So I've got this over a 5-year period, and you can see that it's pretty much been in free fall. We hit a high in the week of the end of December back in 2021, and that's where it closed at about $2.42. And since then, it's pretty much been in free fall. You've seen the market come off. We had a brief rally and then it fell again, another brief rally, and so on and so forth. So these little rallies that we're seeing along the way here, that's what's sometimes referred to as a dead cat bounce, because let's face it, if you drop anything from a height, dead or alive, it will still keep having some bounce. But of course, those highs are getting lower and those lows are also getting lower. So for me, Heartland Group is definitely not a share that I would want to be owning. Let's run the moving average over it. We're going to put a 200 period moving average. And the reason I'm using that, and I'll just leave it as simple, is because that gives us an idea as to the overall trend of the share. And you can see here that the 200 moving average has got a closing figure, if you like, of about $1.47. But you can see here on the Australian Stock Exchange, it's actually trading at 75 cents. So it's well below that 200 moving average. Let's jump across and have a look at it on the New Zealand market as well. Again, it hit that high. This time it was a bit later in the New Zealand market. It hit it at the beginning of March 2022. And you can see here that it had a close that particular week of $2.55. Since then, we've been seeing sort of similarities with what we've been seeing with the Australian market. It hit those highs. It sold off. We had a little bit of a rally, sold again, rally, sold. And you can see it's again that dead cat bounce pattern forming. Let's put the moving averages on. And again, I'm going to use the 200 for this one. And again, you can see here that the moving average is suggesting that it should be around that $1.58 mark. And of course, we're trading at 81 cents. Now, I'll just remove that. One thing that you can see here at the moment is Heartland is paying pretty much 6 monthly dividends. Now, the thing that I've spoken about before with dividends, I don't want to buy a share solely on the dividends, okay? And this is a really good example, because even though it's paying out 6 monthly dividends, if you bought at that high of around $2.50 and it's only at 81 cents now, that is a lot of dividends you have to receive in order to make up that loss in the capital value of the share. For me, I want to use trailing stops to take me out of the market if something sinister should happen. The interesting thing that I did note here is in New Zealand, Heartland paid a dividend back on about the 3rd of March. If I go over to the Australian market, it has only paid a dividend back in February 2024. So we're looking almost a year and a half ago since it had a dividend in the Australian market. So again, obviously, Heartland is a New Zealand company, but it is dual listed. Thing to look at now as well is there any arbitrage opportunities? So we're trading at 75 cents on the Australian market, and we're trading at 81 cents on the New Zealand. Now, I've pulled up the ANZ foreign currency calculator here, and I've put in those values, so 81 cents. And it's interestingly enough, on today's currency exchange, it's working out at 81 cents New Zealand is the equivalent of 74 cents in Australian. So you're only talking 1 cent difference. And I've spoken on that before, that potentially, 1 cent, is it really worth it? That's a lot of money you'd have to invest, remembering that you've got brokerage fees. You've got brokerage fees 4 times, one to buy, then sell, the other one to sell, then buy. Plus, you've obviously got any fees associated with the currency transfer and that sort of things. And I'm not one to be looking for arbitrage opportunities, but I'm just putting that out there because that's what someone was wanting me to look at. So probably not a lot of difference at this stage. Let's just take that off and we will go back to the New Zealand market. Let's also put on the moving averages for the 30 and 15 week. You can see here on the New Zealand market for Heartland Group, it is trading well below that moving average, and it's a falling moving average as well, which I've spoken about, the dead cat bounce. So that's also why we don't want to, in my view, buy shares when they're trading down like this, because shares can ride to zero. Trust me, I have had that happen, especially in my early days of having a go at share trading. Let's also put on the 15-week moving average and just see how that compares. And you can see the 15-week moving average actually fell through the 30-week at around May 2020. It did come really close through this period, which is August 2023 through to about October, and then it's clearly fallen away. And you can see it's still trading below both of those moving averages, and that's why, for me, I would not want to be entering into this sort of share. Let's take those off. Right, I'm going to put on a trailing stop. Okay, now when I use a trailing stop, I use a 21 period, but I actually use a 4 times multiplier. So the ATR is the average trading range. So that's how far a share potentially trades, in this case, in any 1 week. Right, let's pop that on. If we go back to around September 2020, you can just see the little green dots. Now, that is where I would place my trailing stop. Now, as that share kept rising, as you can see, these dots are moving, and that is where I would keep increasing my trailing stop. So eventually, the idea is the share has risen above where your entry point is. And in this example, it peaked at around $2.18, $2.19, and then it started to fall. And then on the right-hand side, you can see that's for someone who was trying to short sell. But for me, I would have been knocked out of this share probably around March 2022 if I had actually owned it and used the trailing stop. It is not a share that I own. So this is just giving you an example as to the trailing stops and how they work. Now, if you are wanting to short this share, these red dots at the top here indicate where you would put your stop loss if you were selling the share first before you owned it. So as the share keeps falling in value, you obviously want to bring your stop loss down, or be your buy in this example, down, so that if the share did rally, you would automatically be bought, and so it's not going to rally continuously against you. That's in a short sold position. But like the way I trade, I want to buy the share first, then put the stop in. And what I like about the trailing stops as well is it takes out all emotion. So it means that I'm not going to be second guessing myself thinking, oh, should I be hanging on a bit longer? I don't have any emotion to the share. I certainly don't think by any stretch of the imagination any share is a good share. I religiously put in my stop losses so that when something happens in the market, in this example, we would be automatically taken out. So this is a really, really good example. And for someone who is wanting to short this share as well, being the opposite, you're selling it before you buy it, here is a really good example as to where you would have your trailing stops. So in other words, it would buy the share for you if it started to rise. So at the moment, where it is at the moment, you would probably have if you were using my methodology, of course, you'd probably have that at around 97 cents. So if the share suddenly rose and at the moment it hit 97 cents, it would close out your short position and it would buy the share back. Okay, so it means that you're suddenly not going to ride it all the way back up to $2 something if that's to happen in that share. So that's it for Heartland Group. Certainly not something that is on my radar, but hopefully that's helped you. And remember, if you've got any questions that you're unsure about, let me know, because I'm happy to do videos on them, happy to run training sessions, that sort of thing, to give you value and to give you confidence as well about trading in the share market. Hopefully you can join me as well next Wednesday and we can go through the KiwiSaver and Retirement course as well. Love to see you there. Take care.